Month over month foreclosures are skyrocketing, along with mortgage late payments and rental late payments. And the trajectory of these late payments is much faster than normal. Now, I'm going to show you guys these stats along with more information on the CFPB and how banks have been violating Dodd-Frank QM laws. And we're going to go over an admission of guilt from the central appraisal districts about the fraud they are committing against homeowners. And you guys, here's the crazy thing. These acknowledgments of these violations is absolutely shocking and another sign of how important it is for us all to fight against the corruption together. And we're going to talk about what it's going to take for us all to fight together to get this job done. But first, you guys know that this video is going to be absolutely bonkers. Mitch Vexler, how are you doing today?
Well, everything is interesting. Gold, as we speak, is hitting an all-time high. When I looked at it a few minutes ago, it was already up $93, and that's just absolutely astonishing. But here's the big point. Everybody should understand what that means and why is it hitting an all-time high and why is it running? I've never seen anything like this. It's running because the central banks are buying. That's the bottom line. They know what they have done with regard to the fraud that's been committed on society. And we're about to get into this with the admission of guilt on the local side at the taxing entity level. And the central banks, that's proof enough for everybody to go and look at what gold and silver are doing.
I'm glad I got that silver. Now, for the viewers, before I start the data presentation, and we're going to use HUD, and I'm going to show you guys all of the updated stats on late payments. But before I show you the millions of people that are behind right now, I first want to listen to just one video from TikTok from a young woman who is about to lose her house. And I want you guys to remember when we're going over that data, we're only watching a video from just one person. There are millions of Americans facing the same issues as what this one individual woman is going through. Take a look.
Hey guys, this is not the normal content that you see from me, but I figure my experience might help somebody on here to not be going through what I am. All morning I have been on phone calls after phone calls, and in between that, crying my eyes out because my life has been completely turned upside down. About 6 months ago, I went to a debt consolidation company and they help you pay your bills. And all you had to do is just give them your information, all the places that need to be paid, whatever. And then they take the money and they pay your bills for you. Well, that's what they're supposed to do. For the first time in a long time, I was so happy because I didn't have to worry about being late on my payments or anything like that. Well, that was until I received the handwritten letter or the hand-delivered letter today saying that if I don't come up with like almost $10,000, I'm going to lose my house. I called the local police department and they said that there's not really anything they can do because there's no way to track down these fraud companies. And it's just, it's so hard. I also called my bank and there's nothing they can do because I gave people authorization to take the money to pay my bills. So I'm out of luck. So unless I come up with almost $10,000 in 10 days, my house is going to be foreclosed. Me and my 4 kids aren't going to have a home. And I don't know what to do.
Obviously, we don't know the exact situation for that young woman, but that's a mother with 4 children who's about to get kicked out because she doesn't magically have $10,000. So again, as I'm going through these big numbers, remember, each of those numbers represents a family. The data review is going to be from the Housing Market Indicator monthly update for March 2025 from HUD. Okay. And I want to show you guys the data inputs first. I've done all the calculations for you, but again, first I want to show you where I'm getting the calculations. I'm going to scroll down here. So we're going to talk about this chart right here, emphasis on renter households. You can see the delinquency rate or the late payment rate for rental households right now is 12.8%. Now for homeowners and households behind on their mortgage, that's actually 5.9%. So again, I don't know what Black Knight is talking about. I believe that their methodology should take the entire picture and not just look at the good parts. In other words, Black Knight is not telling us the true picture of what's going on. When I go to page 7, it's going to tell us what the data is weighted by, or essentially the number of households. The first thing, behind on rental payments, you guys see that they're taking into account 45.99 million US rental households. When we go down here to behind on mortgage payments, you can see that the data is weighed by 82.5 million households. So I wanted you guys to understand how I was getting my information. Let's start with homeowner households' ability to pay their mortgage. You guys see that I've highlighted that row. That 5.9% is this month. Last month, the late payment percentage was 5.41. The one to the right of that that says 5.2 is what we were at 1 year ago. So we've gone up about 0.7. Now, the first thing I want to say is the month over month change. So we go from 5.41 to 5.9. That's a difference of little less than half a percentage. When we multiply that half a percentage to the total amount of households, that means in just 1 month, another 412,000 households are behind on their mortgage. Again, you guys, in just 1 month. When we compare that to 1 year ago at 5.2%, the number of households 1 year ago to right now that are behind is 577,000. Okay, so 1 year we've had 577,000 increases, but in just 1 month, we have 420. Do you guys see what I'm saying? Now, the total amount of households, when we go 5.9% times the 82.5 million, that gives us a total of 4.86 million households right now that are currently behind on their mortgage. That's absolutely insane. And again, that 1 month trajectory, absolutely skyrocketing. Now let's go to rental households, because this is also important. Let me highlight this. It's the same format as below, but right now, you guys, we're sitting at 12.8% of total rental households. To me, that's absolutely mind-blowing. 12.8% of rental households can't afford to make their rent payment. That's insane. But look at last month, we were at 12.3. So in just 1 month, we had an increase of a half a percentage, which totals 950,000 more households that are behind on their rent payment in just 1 month. When we look at the year over year, 12.1 to 12.8, the difference there is 321,000 more households. So again, 1 year it was 321, but in just 1 month, the recent month, it was 229,000. So that's what I'm explaining to you guys. The 1 month trajectory right now is blowing up. How could people be behind on their mortgages when we have the Dodd-Frank Wall Street Reform and Consumer Protection Act? Well, I want to remind you guys that they changed the law and they removed debt to income ratio. I want to read a couple things here from this. For general QM loans, the ratio of the consumer's total monthly debt to total monthly income, known as the DTI ratio or debt to income ratio, must not exceed 43%. You guys see that right here. However, instead of the CFPB, the Consumer Financial Protection Bureau, first word in there is consumer, second word is protection. They failed on all of those things. And instead of them warning consumers and penalizing these banks, they instead found, and I'm going to read this here, okay? And this is based on just 2018. Based on 2018 data, the Bureau estimates that as a result of the general QM loan definitions, 43% DTI, approximately 957,000 loans, or 16% of all close-end first mortgages, residential mortgages originated in 2018, would be affected by the expiration of the temporary GSE loan definition, which means 957,000 loans are with people that can't really afford their house. And that's in 2018. And around 2022, they removed DTI completely from qualified mortgages. So how much worse do you think it is right now? Mitch, A lot of people respect your ability to maneuver in such a toxic economy in the housing market. Can you articulate and can you explain to us how the normal mom and pop, okay, and understand, right? The normal mom and pop may have some credit card debt. The normal mom and pop may have school loans and personal loans and maybe drowning in debt. So how can the normal mom and pop, whether they own or whether they rent, hedge themselves against a foreclosure and affordability crisis?
That TikTok video, she was complaining that she went to the police. The police are wrong. They have full authority to look into this. Over and above that, we have produced dozens of videos, and this video is going to have an awful lot of information in it, which literally will end up proving that they are guilty by their own admission. So hedging means that you're going to believe something bad is going to happen, which in itself means you're looking into the future. This is a possibility. Well, I've put the math out there that in the state of Texas, over 4 million homes are in harm's way of bankruptcy. Across the United States, over 42 million homes in harm's way of bankruptcy. 37% of the household population is going to go bankrupt and or lose the roof over their head. Hedging against it after the fact doesn't mean anything. You can't do it. It's too late. You're now in harm's way. So the question then becomes, what can be done about that? Well, the police are wrong. The DAs are wrong. The judges that don't want to hear these cases are wrong. And all hell is about to break loose if this isn't put back in the bottle. So what can be done, there's something in math called clustering. That young lady is not alone in her neighborhood. She just doesn't know it. When these things occur, there's more than one person in a neighborhood who is in trouble. If several people can join forces and find an attorney, be it a pro bono attorney or a civil rights attorney, because that's what partially this is, then you can attack. And the way you attack is you file suit against the individuals who are responsible for this, which are the chief appraisers, the school superintendents, the board of directors. We're past the point of saying, well, we're just going to sue based on value, which is what they want you to believe. However, when you study state's law, you will see that the parties responsible are the school superintendents, the chief appraisers, the board of directors. And it gets even worse when you realize, we're going to get into that here in a few minutes, to show you by their own admission that their own documents mean nothing. You are literally being ripped off. And when I say you, that's not just that young lady or anybody who's in harm's way. It is you, the collective, me, Travis, everybody is literally being ripped off. There's no other way to talk about it by these central appraisal districts and their masters, which are the school districts. What we're about to show you is going to be horrifying, and it's their own text. No way out. They're caught. Now, the question is what to do about it. And the answer is, as far as the hedge, go join a collective, join a group, and sue them into oblivion.
Okay, I want to reiterate what Mitch just said, because he's been talking to me about this at least for the last week in a lot more detail. And that's one of the main purposes of having a newsletter and having a paid Discord, is so that we can help people and still, have a life. But what he's saying is, join a collective. Start with your HOA, start with the people that live in your subdivision, and instead of you spending all of your money to go after these people, do it as a combined effort. Very, very smart. Now, Mitch, I'm going to go over data that's showing that the trajectory of foreclosure proceedings, because we just went over late payments, is also skyrocketing. And also, you guys, I want to mention that not only do we have these lenders violating qualified mortgage affordability guidelines, but we also have an absolute catastrophe with both price and payments. But let's start with foreclosure proceedings. Mitch, looks like you have something to say, am I right?
Yes. So Travis mentioned Black Knight as the report. There are multiple, and I mean multiple, reporting entities that parrot back what they think they know without providing the raw data. And the problem with those entities, and by not providing the raw data, they're setting the viewers up in their own ignorance, not the viewer's ignorance, but the ignorance of those writing the reports. They don't know the law. They don't know the math. They don't know USPAT. They don't know what the effects are because they've never run the math on mom and pop. So the reporting entities are doing nobody a service unless they are providing the raw data and say, here, you people are smart enough. You can figure it out. They're nothing more than parrots. Some of them have good intent. There's no doubt about it. But the bottom line is the bottom line. And if they do not understand the law, they do not understand the math, they do not understand USPAT, they don't know what the Appraisal Foundation has created, which is, as you're about to see, deemed completely useless, then what they're reporting means nothing and it's a spit in the ocean. You're going to find that the 37% number that we've come up with on the median, on the average households not being able to afford their household payment and or will go bankrupt, you're going to find that that number is extraordinarily accurate.
Well said, Mitch. I'm going to jump now into a Zero Hedge article. This article came out from Zero Hedge on April 14th, titled "More than 35,000 U.S. Properties Foreclosed in March." So we're not talking about late payments now. We're talking about actual foreclosures. And the thing that I really like about this article, it's going to get into the recent modification laws that have recently been shut down. But let me read the first part of this. The number of properties foreclosed in March, as well as the first quarter of this year, registered an increase amid elevated interest rates, according to the real estate data company ATTOM. There was a total of 35,890 U.S. properties with foreclosure filings in March of 2025. The figure is up 11% from February and 9% year over year. Following 3 consecutive quarters of decline, foreclosure activity ticked up from the first quarter of 2025. Now, ATTOM is like Black Knight as far as methodology and not looking at all the data. And honestly, I don't like either one of them. I just want the raw data because I know how to do simple division. I mean, that's really all this takes, is dividing 2 numbers together. That's it. And so I'm going to scroll down here, guys, and I'm going to go over foreclosure policies. Okay, so you guys kind of know what's going on with the policies that have been here since COVID-19. The Trump administration agencies have taken several actions regarding property foreclosures. Some lawmakers have criticized, while others welcomed, reports of the Department of Veteran Affairs planning to end the Veteran Affairs Servicing Purchase, or the VAS program, which assists veterans facing foreclosure on their properties. House Veteran Affairs Committee ranking member Mark Takano criticized the decision on April 4th. And this is what he says: President Trump has chosen to put 15,000 veterans using the VAS program at financial risk and end a program that could help nearly 80,000 veterans who are in danger of foreclosures. But personally, when I hear that, I can't help but think, well, what about when you remove the debt to income ratio from qualified mortgages? Doesn't that matter? Because if you kept the qualified mortgage 43% DTI, I can pretty much say that more than half of those people wouldn't be in the situation they're in now because they would have been denied a loan. Meanwhile, the Department of Housing and Urban Development, or HUD, announced this past week that it was extending foreclosure relief to more than 1 million borrowers of FHA loans recovering from the impacts of Hurricanes Milton and Helene. The moratorium prohibits mortgage servicers from starting or completing foreclosure actions on FHA-insured single-family mortgages or home equity conversion mortgages. The 90-day moratorium will remain in effect until July 10th and is the second extension of the moratorium. The first moratorium expired on April 11th. FHA insures more than 1 million single-family home mortgages. Now, it's important to note that as of April 30th, so the end of this month, the moratoriums for COVID-19 ends. Here's another issue. When we actually calculate the debt to income ratio and we compare that to the bubble of 2006 and 2007 right here, you can see that homes are about 10% more unaffordable from a debt to income ratio standpoint. So in other words, during the global financial crisis, when everyone got messed up, remember the peak debt to income ratio was in July of 2006, sitting at 31.7%. Now, a lot of people can't see this in national payment ratios because they don't include taxes and insurance. The data you guys are looking at right now includes taxes and insurance. During the worst bubble in history, 31.7%, October of 2023, at at 44.3%. Let me ask you guys something. If qualified mortgages had a maximum debt to income ratio of 43%, then how is the average 44.3% in October of 2023? I'm going to tell you guys, fraud, greed, and corruption is how. When we look at the more important thing, which is the price, and we look at long-term trends, home price to median household income, look at this. We're sitting at right now 7.36. During the global financial crisis, we were at 6.79. During the 70s and 80s inflation battle, look at this. We were under 5 the entire time. Look at that. And sometimes we were in the 3s. There is no comparison as to what's happening right now versus the 70s and the 80s. Mitch, from your experience, being an investor, developer, creating subdivisions of homes back when you can build a house that would stay standing during a windstorm, not like right now. Have you ever seen a more toxic housing market than what you see right now?
No, there's never been anything like this. And it's easy to get there when you understand the math. It's the rule of 72. And the Federal Reserve has been printing money, compounding the rule of 72 and giving the illusion that the American way of life, the standards, are going up. They are not. It's going down. When you back out all the money that's been printed, you're starting to see these problems now. This amount of people, this is a big deal. 42 million households in the United States are in harm's way of bankruptcy or losing the roof over their head. There are fixes for this. We're going to get into that towards the end because I have just something I want to say towards the end of this. But there is nothing that has existed in the history of the United States that is as this bad. The two biggest purveyors of this problem are the Federal Reserve and the central appraisal districts, and the central appraisal districts are owned by the school districts. This is bad at the state level. This is bad at the federal level. And there are ways to stop it, but people are going to have to get off their ass and you're going to have to get busy fast.
Yeah, but we will help lead the way for a lot of people. So you don't necessarily, you kind of have to do it on your own, but you don't necessarily have to do it on your own because we have built something called an empowerment center for you guys. The whole foundation is free. I really hope you guys are taking advantage of that. Now, let's go into the property tax fraud. I'm going to show you guys stuff that it's going to blow your mind. If you're a politician and you watch this next segment, it's proof positive that the software that they're using, you can't call it UsePap. Call it something else. Just if you call it UsePap, it's 100% fraud. Before I show you guys and we go into details of this admission of guilt and we show you guys that they're using software to conduct this fraud, I first want to listen to a TikTok video from a recent homeowner who thought she was purchasing the home of her dreams. Come to find out, she now wants to move as a result of a surprise property tax bill. So let's listen to this TikTok and then we'll go into the admission of guilt.
Okay, I need everyone to chime in on what their numbers are in what state and city they live in. Because in 2024, we bought our dream house. My husband and I had intended on never moving and living here literally until I die. I like Kansas City, Missouri. I like Kansas City a lot. And I don't want our children growing up moving all the time like my husband and I did. However, I'm looking over the breakdown of our property tax on our home for the county we live in for last year. And I don't even know what half this stuff is. So, for example, county services, $63, whatever, maybe that pays the people that pave the roads. Handicap tax. So if I'm not handicapped and I don't use any handicap spaces, what is this going towards? $48.76. Health tax, $40.67. Maybe that goes into the big pool of people on like state insurance. No big deal. Fine. Don't have a problem with that. Everyone deserves health care. Kansas City tax, $768. KCJC, I don't know if that's Kansas City Johnson County tax, but I don't live in Johnson County, so I don't understand what KCJC tax is. That's $90. Library tax, I'm all for paying that. We go to story time at the library all the time. $158.45. I love books. I have no problem paying a tax to keep our libraries open. Mental health tax, $40.67. I'm just curious, like, are you actually using that for mental health purposes? To be in our school district, I'm not going to say what school district we're in, but to be in the school district we're in, $2,823. So we don't have children old enough to go to school, yet we pay $2,800 for the year just to be in the school district, and lunches still aren't free? Like, this is what I don't understand. How are teachers underpaid and kids at school lunches aren't free, yet people like us who still have 2 kids in diapers, not even in pre-K yet, and we're paying $2,800? And every other house around us, we have all kinds of houses around us with no children. And you know, they're paying the same amount. So by the end of it, we paid $4,049.50 in property tax just for the year. I just don't understand. Is this like low? Is this high? I want to know what other people are paying. I'm nosy.
If that young lady so happened to be watching, I'm going to show you, and Mitch is going to explain how they're doing this to begin with. I want to start with this document that Mitch Vexler sent me. Appraisal notices are in the mail. Will it impact my property taxes? And a couple things. I want to read you guys 2 paragraphs. Now, remember, when they're valuing our houses, they're supposed to be honest and use math, right? There's a certain code called USPAP that they have to adhere to value our houses legally. But look at what they're saying right here. Again, this is an acknowledgement of how they're valuing our homes. Changes in market values do not translate directly into changes in property tax bills. Instead, values determine a property owner's portion of the total tax levy. What? The total tax levy is determined by budgets set by local taxing entities. There it is, right there. Values are set by budgets by local school districts, which are taxing entities that own the Central Appraisal District. One more thing here on Austin, because this right here, when I read this, guys, I about fell out of my seat, because this is what Austin CADs are saying. Last year, the typical Austin homeowner saw a more than 13% increase in their tax bill between those entities, okay? So they said a 13% increase. But look at this, you guys. Now, well, first of all, a 13% increase. That's insane. Now, I want to explain. That's for 2024. And remember how assessment works. They take the preceding year's comps. So in order for 2024 to have a 13% increase, remember, you guys, they used 2023 comps to show that 13% increase. The problem? Any data provider that you look at, any data provider whatsoever, when we plug in Austin, home values didn't go up 13% in 2023. Home values plummeted depending on the time of year. You guys see right here in April, just looking at April from peak to bottom, declined 19%. In the entire year, it ends down 2% when we compare year over year. Look at the fall in prices. Look at that. So home values go down 19 to 10%, and yet the Central Appraisal District increased it by 13%. So it goes down 19%, but they're saying, don't worry about that. You still owe us money. We're going to raise the value 13%, even though it went down 19%. That is a massive violation that's leading to skyrocketing homelessness. It's now up to 707,378 people who are now homeless. Mitch, now we've been pounding the drum on this. We've been making courses, free downloads, spending I don't know how many days, weeks, months, and hours on working on this. But let's start from scratch. How does America fix the property tax fraud problem and we slow down this bankruptcy and foreclosure wave that's coming? What must America do today?
It's important to understand that what these central appraisal districts are doing, they're guesstimating. And it is irrefutable fraud. They are not valuing the properties per uniform standards of professional appraisal practice, per your state's code, real estate tax code, per your state's constitution. This is happening across the United States. It is irrefutable. They are committing fraud. Then the school districts get their hands on those tax receipts and they lever those tax receipts up into accounting fraud and bond fraud. Our numbers show that in the bond fraud department, it's roughly 5.1 trillion of outstanding school district bond fraud across the United States. There are no assets backing that money up. This system will blow to shreds. It's only a question of if, not when. This is what they have done. If somebody wants the math, wants to debate me on it, I'm all ears. we'll find a stadium somewhere that's going to hold several thousand people. And we've offered this to the chief appraisers. We've offered this to the Texas Finance Committee en masse. I'm happy to debate 31 people at a crack. They can even bring their attorneys. I don't care. The reason why they don't respond to these things is because they can't take the heat. They can't take the truth, because the truth is their documents. What you just saw is literally written on a website for a central appraisal district. In Godley, Texas, the median value of a house is $160,000. In 3.5 years, given the attempted current bond raise, in 3.5 years, the outstanding fraudulent school district bond debt will exceed that of the median home value in Godley, Texas. In Argyle, Texas, the school district bond debt is roughly $343,000 with a median value of a house at $450,000. When you understand this, it's very easy to back into where we started with a few months ago, the 37% of the households going bankrupt and or losing the roof over their head. This is the trajectory. This is what's happening. These politicians are blind, ignorant, foolish, but here's the underlying point. A vast majority of them are attorneys. And as attorneys, they are officers of the court. And as an officer of the court, you are deemed a person with knowledge. If you are an attorney and a politician, best you go study up on federal law. Over and above that, we filed a criminal complaint. And that criminal complaint is naming names, and it includes the entire executive branch for the state of Texas. It includes those people who are responsible for this, who choose to turn a blind eye and say everything is fine. Travis just showed you in your own writing, again, it isn't fine. Over and above that, we published a document called violations.pdf, and Travis will post that below this video. Thank you, Travis. He doesn't know it yet, but he will. So in that document are 10 pages of laws, state and federal, that are being violated. And that same document can be adapted right across the United States. The federal laws that are being violated are the federal laws. So every mom and pop that's out there can take that document and modify it to suit their circumstances. So the First Amendment to the criminal complaint that we filed about 10 days ago goes on to name the school district boards, the school superintendents, and the central appraisal district boards, and multiple chief appraisers across the state of Texas. They cannot get away from what they have done. It's in their own writing. We are not adhering to USPAC. We're going to create a value based on our budget. Well, that being the case, Real Estate Foundation doesn't have a purpose to exist. USPAC doesn't have a purpose to exist. Texas Property Tax Code, which requires USPAC, doesn't have a purpose to exist. Texas State Constitution, which requires uniform and equal, doesn't have a purpose to exist. But if these documents are all created by our state government, our state officials, shouldn't exist because of the fraud, that proves the fact that the fraud is irrefutable. This is what you have done. You cannot get away from it. So the fix is repealing the real estate tax in favor of the uniform state sales tax and wiping the central appraisal districts and the associated criminals, the individuals, go after them civilly for damages, put them in jail, because that's where they belong. They cannot say they didn't know that this was happening. Impossible. There's been dozens of articles written in the press. Lord knows how many videos we've done. When I send these emails out or send an email out, I send it to the executive branch. We're hiding nothing. We're putting it right in your face. You cannot say you didn't know. And this goes all the way up the chain. We've submitted documents to the White House, right? We want the White House involved. We want Elon Musk involved. We want Pam Bondi involved. And we're giving them everything we've got. We're giving them the firepower necessary to put these people in jail and put a stop to this. You've got to restore the balance sheet to mom and pop by eliminating the real estate tax. You repeal the tax in favor of the uniform states sales tax, and that puts everybody across the United States on the same playing field, where you cannot lose your home through foreclosure by not paying the tax, because the tax won't exist. It flips into something that's quantifiable, which is the uniform states sales tax. Ignore what we're saying here, and you are literally putting 37% of the households on a chopping block. They're going to go bankrupt, or they're going to lose the roof over their head. And if that happens, The politicians are to blame. Whatever happens, they've got coming straight at them.
And if the politicians are watching and they've made it this far in the video, I want to show you guys just one more thing, which again, it's proof positive that these softwares is just that the software is just a conduit for them to commit fraud, to overtax us illegally. Let me show you an active listing. So I like to use this one. This is now option pending, but it is still on MLS. It's probably option pending because I included this listing, this active listing in my videos. Every time I show the viewers that I find a house with wedge, almost cash flow, it's like it's under contract within a week. I'm going to stop doing that, Mitch, but I want you guys to notice that they just went under contract for about $620,000. Okay. This has been on the market for 93 days, by the way. So $620,000. The problem is that the Central Appraisal District is not taxing it based on $620,000. The Central Appraisal District is taxing it based on $813,112. You guys, that's proof positive that they are committing fraud, and that fraud will lead to more bankruptcies and foreclosures, especially if you and I do nothing about it. So having said that, make sure to go to the description in this video and click all of the links on property taxes or just how to purchase real estate, because we can no longer keep our heads in the sand. We are on the front end and in a recession. And if we really want to become winners on the other side of this thing, we have to start getting serious right now. And the last thing, guys, if you can, like this video, comment on the video, share it. Let us know what you want us to teach you guys about. Let us know how we did with the data presentation. And other than that, if you guys are out there investing in real estate, yourself, your family, your own education, you guys already know we wish you luck and we hope you win.